Today on the Sustainable Investing Hub, we have David Russell, who is chair of the Transition Pathway Initiative. Thank you so much for joining us in the studio today, David.
Thank you, Natalie, for having me.
So for those that don't know, please can you give some details on what exactly the Transition Pathway Initiative, or TPI as it's sometimes known, exactly what it does?
Sure. I mean, it's probably worth putting some of this into historical context. TPI really came about because of the Paris COP in 2015, when the term transition became part of the climate lingo for investors. We had companies coming up to us as asset owners and asset managers in the UK saying, we've got transition plans, we're doing very well, trust us. We had no way of measuring that. The only tool we had for assessing how companies were doing was carbon footprinting, which has its uses, but is very backward looking. So a group of asset owners set up the TPI, working with the London School of Economics and FTSE Russell as a data provider, to look forward. What are companies saying they're doing about setting targets around the transition to net zero or Paris alignment? And also, how are they governing that? So we have two scores, one of which is a management quality score, a governance score, which assesses how companies are managing that transition. And secondly, where the transition pathways come into it, is we look at the targets companies are setting over the short, medium and long term, against sector-specific transition pathways, against various climate scenarios, 1.5 degrees, 2 degrees, and 2.8 degrees, which is the commitments that governments have made. So we plot where the targets are against those transition pathways. So it gives investors two scores to use, one of which how companies are managing their transition, and one, what are they saying they're doing in terms of actually setting targets to get there.
Okay, and it's becoming a regulatory requirement as well for some companies to create these transition plans and pathways as well.
Sure, it is. The UK a few years ago set up the Transition Plan Task Force. And from that, that's been built into the TCFD regulations for climate reporting for big asset managers and asset owners and the large listed companies. So we've seen a lot more focus on transition planning in the UK context. But TPI is global, and we're hoping that the good work that was put into the TPT development of transition plans would be adopted in other markets around the world. One of the cornerstones of TPI is we rely on publicly available information only. We don't send questionnaires to companies about what they are doing. We just take the information that they publish in their TCFD reports, their CSR reports, their annual reports on their website, and use that to analyse what they are doing, rather than sending them a questionnaire and it going into a black box.
So it sounds like there's a lot that you can do to help companies with their transition pathways. How exactly does that look like? What does that look like on a day-to-day basis in terms of putting these transition plans into practice? And I understand there's two elements to TPI. There's an investor network and a research centre. So yeah, how do companies use this?
So I think it's really important to say that TPI doesn't engage with companies. TPI provides information to investors so that they can engage with companies, or they can build that into investment decisions, or that can be built into indexes which investors are using. What we do is provide a framework that helps companies assess where they are going in terms of the transition. We provide basically a set of questions. There are 23 questions as part of the management quality, the governance assessment, and companies can use that as a checklist. And we find that they start at the bottom and then they work through putting in place the different policies and activities they need to do to answer the questions that we have within our methodology and assessment framework. In terms of the structure of TPI, yes, there are two parts to it. There's TPI Limited, which is the part that I'm chair of, which is basically the asset owner board that owns the brand of TPI. And our role is to raise profile of TPI, both in the UK and internationally. The TPI Centre, where all the research is done and the methodologies have been developed, is at the London School of the Grantham Institute within the London School of Economics, where there are approximately just under 30 research analysts led by Professor Simon Dietz and Carmen Nuzo, who do all the clever stuff and all the work. They do analysis, they do the building of the methodologies and assessment processes to analyse companies and, in fact, countries, because we also have a process for assessing how countries are transitioning as core, assessing sovereign climate opportunity and risk. TPI Centre also does the core analysis for the Climate Action 100 global investor collaboration around stewardship and engagement with the highest emitting companies. And it also has a project where it focuses on assessing how banks are transitioning. So it does quite a lot of work in addition to the core TPI data.
Yeah, there's a lot of moving parts there.
Yeah.
Okay, so with the assessment processes, you're gathering the information, is it then down to the firms to monitor their progress, or is that something you're keeping an eye on too?
Well, we do a regular assessment. We started in 2017, and each year we assess more companies as part of the process. This year on management quality, in 2024 we published assessment for 2,000 companies. That's likely to increase this year. We did around 500 companies on the carbon performance assessment. These are the most carbon intensive sectors and companies. Therefore, we pick up quite a large proportion of global listed company emissions. But we don't tell companies what to do. That's the role of investors. They hold the equities or fixed income credit of these companies. They're the ones who'll be engaging with the companies and encouraging them to put in place better policies or that show they are going to transition to Paris alignment or net zero, or put in place the governance structures so their score gets better. So it's not up to TPI to do that. It's up to the investors who are using the information to engage with the companies to get them to improve their performance. Okay.
And with the oversight that you have and the information that you're gathering, are there any areas where you're seeing quite a lot of progress, or areas that you think that we need some real improvement here?
I think that over time there has definitely been an improvement in how companies are governing their transition. When we set this up, the scoring was relatively low. We had a 0 to 4 scale. What we saw by 2023 is that we were seeing a clustering around a 3 and 4 score. So we saw companies getting better in that assessment. So we added a level 5 to get better differentiation, a stronger focus on actual transition planning as opposed to just on targets. You have to remember, when we set this up in 2016, 2017, there simply weren't any transition plans and very few companies had targets. So what we've seen over the last few years is more companies having targets, more putting in place proper transition plans and the governance around that. So we have seen improvement. There has undoubtedly been some, should we say, backsliding amongst some large oil companies and others over the last few years as geopolitics has changed the way that we look at climate change, or they look at climate change and energy policy. So we think that's a blip, and there's a certain direction of travel here, and we're definitely going to see more companies putting in place transition plans, putting in place those targets. So, yeah.
Okay, yeah, I really hope it is a blip. And are there any companies scoring that new level, that 5?
Yes, but it's a relatively low percentage. It's something like 5% out of, 5% of the 2,000 companies that we assess in management quality. So it is a relatively hard thing to do. It's around CapEx and what companies are spending on the transition, or moving away CapEx from non-transitioning. It's about how companies are using carbon offsets as part of their transition planning. So this is relatively new stuff for most companies. So most companies aren't in that kind of space yet.
Yeah, it's absolutely a different world to sort of 2016, as you said before. Okay, so what's the future plans for TPI? They understand you're travelling around quite a bit.
Well, yeah, I mean, I think firstly, we're going to increase the coverage. So, as I said before, we have around 2,000 companies on management quality. That will go to 4,000 this year, at least, possibly many more thousands than that. We're also looking at expanding our carbon performance assessments. The London School of Economics TPI Centre does all that work in-house, so it's actually quite constrained and resource constrained around that, so that's why it's only 500. So we're looking at a machine learning AI-based assessment that will be able to mean that we can take that assessment from 500 to 1,000 to 2,000 and hopefully get broad market coverage. We're also beginning to see a focus on emerging markets and how we deal with the assessment of companies in emerging markets. There's a bias in most ESG data sets, if you're relying on public disclosure of information, many emerging market companies simply aren't required to do that by their own regulators. So there's less disclosure. So you find these companies have lower scores. So we've been talking to investors, talking to policymakers around how we deal with that issue with emerging market companies scoring badly. ASCOR helps with that, the Assessing Sovereign Climate Opportunity Risk, because we can look at the data around how countries are transitioning as well as how companies are transitioning and make the link between the two. But it's kind of work in progress.
Okay, fantastic. Well, thank you very much for coming in and sharing all your insights with us. Fab to have you in.
Great, thanks very much.